Welcome back to another episode of Stock Talk. If you guys are new to my channel, welcome. My name is Julie. In today's video, I want to go over 6 dividend stocks that just recently increased their dividend. So I know there's a lot of things going on in the world right now, like Russia about to invade Ukraine. The Feds had a meeting behind closed doors today, so there's a lot of craziness happening right now, and we are seeing a lot of sell-off in the stock market, and a lot of investors are actually scared to start investing when they see the stock market going down. However, that is some of the time where you can pick up some of the best companies that you want to hold for long term really cheap. So that's why I want to give you this video and point out 6 dividend stocks that I think have a great long-term potential that just increase their dividend. So the first stock that I have on my list is Postal Realty Trust. Postal Realty Trust is a REIT in the real estate sector, and they own and manage properties leased to United Postal Services. So we can see that they currently have 966 owned properties, of which 397 properties are currently under management, and that gives them a 99.6% occupancy. So as I said, they recently increased their dividend yield by a nominal amount of 1.11%. However, that brings the annual dividend yield to 5.10. So I think that's a quite nice return. So I do want to point out that this company has only been founded in 2018, so it's still a very young company, but nevertheless they are paying dividends, and they currently have a moderate buy rating, and their average price target is $21, and we can see that we're currently sitting at around $17, so that gives you roughly an upside potential of 22%. The second company that I want to bring to you guys' attention is in the oil and gas energy sector, and that company is Enbridge. And Enbridge is actually a Canadian energy infrastructure company. Enbridge operates across North America, and it connects energy supply with growing markets through 4 of their core businesses, which is liquid pipelines, natural gas pipeline, gas distribution and storage, as well as renewable energy. Now, out of the 6 stocks that I'm mentioning today, this is the second stock that had a very low increase. However, with the increase of 1.19, that brings the annual yield to 5.77%. So I think that's also a great return on your money if you invested in the stock long term. Now we can see, we take a look at the chart, that we're right now sitting at where we were right before the crash. So we're right back on the same levels. So in my opinion, the stock could probably pull back a little bit more, and especially with everything going on right now, there's definitely a chance for it to pull back. So that's why I want you guys just to start making your watch list, go through these stocks and pick the ones that are best for you guys. But nevertheless, like I mentioned earlier, in the downturn is pretty much when you can pick up some of the best companies for really cheap. So that's why, again, put your watch list together, and then when you feel it's a good price point, that's when you start your position in any of these stocks. Now, the third stock on my list is Envia, and Envia, and I'm not sure if I'm saying it right, but Envia Partners LP engages in the production, process, and distribution of wood biomass to power generators. It offers wood pellets and wood chips, which are used in coal-fired power generation and power plants. And the company was established in 2013, so it's also still a fairly new company. So the stock is currently sitting well above all the moving average. So I definitely would wait for a pullback here, at least to the 50-day moving average. And as always, I'm sitting on my 3-year chart, just so you guys are aware of that. In case you're new to my channel, I always like to look on the 3-year chart to get a broader picture of what's going on. But Envia actually raised its dividend by 2.38%, and that brings it to an annual dividend yield of 4.67. And again, this is in the basic materials sector, and as we can see, it's sitting around $70, and it has an average price target of 74, so that leaves you roughly with a 5.5% upside potential. But like I said, I would definitely wait for the stock to pull back, probably at least to the 50-day moving average, like I said, which is around $58. Now, of course, that might not ever happen, but typically we always see a pullback. So I definitely would wait for it to come down before I would enter this position. So the 4th stock on my list is Chevron. And Chevron is also in the oil and gas energy sector, and it raised its dividend by 6%. So that brings it to almost 4% annual dividend yield. And right now the price target is $142, and sitting at 136, it has roughly a 4.5% upside potential, and it does have a very strong buy rating. Looking at the chart, I would also wait for a pullback because it is a little bit overextended. We can see that actually in the RSI, it's sitting at 73, which is right here, and that means usually it is overbought. Now, of course, it doesn't mean it can't go any higher, because I've seen that numerous times where it's technically overbought and it's still going up, but nevertheless, it's definitely going to pull back, and that's when I would enter this position if that is a stock that you guys want to hold for the long term. My fifth stock on the list is actually Blackstone Minerals, and that is in the utility sector. The ticker symbol for that one is BSM. So let's take a look at the chart first. So we can see right here we are sitting on the 50-day moving average. Prior to the crash, we were right around $18. So right now we're sitting at $11.83, and it does have a price target of around $14.50, which leaves you with an upside potential of about 22.5%. Now, their dividend yield was actually raised by 8%, which brings the total annual yield to 7.83. So that is a really nice return on your money. Now, Blackstone Minerals is an exploration company, and the firm engages in the exploration of oil and natural gas minerals, and it was established in 1876 in Houston, Texas. Blackstone Minerals actually has assets in over 40 states and 60 productive basins, and their footprint covers both established and emerging plays that position them to deliver long-term growth and returns to their shareholders. And they also just released their earnings call beginning of February, so if you guys want to go over that, I welcome you guys to read over that. And the last stock for today is OneMain Holdings, which is also in the financial sector. So OneMain Holdings is a consumer finance company, and it provides origination, underwriting, and servicing of personal loans primarily to non-prime customers. And the company was founded in 2013 and has its headquarters in Evansville, Indiana. And they have actually raised their dividend by 35%. So the annual yield is 12.5%, which is quite astonishing. It also has a really nice upside potential. The stock is currently sitting at around $52, and it has an average price target of 70, which leaves you with 35% upside potential. So this has probably the highest upside potential along with the highest yield. But again, as always, do your research on all these companies and be sure that you guys pick the company that is right for you guys. Don't always necessarily chase the company with the highest yield, because we have to make sure that it can always sustain the dividend payout. But looking at this chart, for example, it looks like it's finding support, and if we look over to the left, we can see that prior this was resistance and it didn't make it past that, but then we have made new highs to $63, and now we're kind of trading sideways between $47 and $54. So you might want to wait for it to come down to around $44 before you enter the stock. But again, if you are purchasing any of these stocks, as I mentioned, for long-term holds, then you can always start a small position and just average into the position if you see the stock falling, which again, with everything happening right now, there's a good chance that the stocks will go lower. But they might also not go lower. So again, don't put all your money into any of these stocks right away. Instead, gradually enter into these positions and then just add to your positions over time. So again, this is not financial advice. Be sure that you guys do your own research, and I hope you guys got something out of this video. If you did, please be sure to hit the like button and consider subscribing to my channel, and don't forget to share my videos with your friends. And I'll see you guys in the next video. Until then, bye-bye.